Hello, and thank you for joining us on the McGraw Council today. My name is John Beeman. This is our first Facebook Live post, first Facebook Live event, and we are going to be doing this weekly as we hear from industry thought leaders across the United States. And today, we are blessed and honored to have Roy Hinkamper of Acciva. Roy, you're up in the St. Louis, Missouri area, and you've actually been on our podcast and have hosted a seminar before. But thank you
Yep.
so much for taking time out of your schedule to join us again today.
I appreciate you, John, for asking me and for taking the time out as well. So thank
Oh,
you.
absolutely. The pleasure is truly mine. So please tell me a little bit with what you're seeing in the whole accounting world, that outsourced CFO financial planning. What are you kind of seeing in terms of industry norms, trends, what we need to be looking out for, all that fun stuff?
Some things it's interesting because where we are right now, some things haven't changed and some things have changed a lot this year. Small businesses are still dealing with the same challenges they've always dealt with. You've always got a question of where's that next dollar coming from? How are we making rent next month? All of those types of things. And then you've also got the challenges related to this particular year where some of those risks of business have been even exacerbated further. And you're saying, all right, not only am I unsure about that, but I've got other forces, black swan types of instances that I could have never guessed that are affecting my business. So as you go through and you start to think about some of those things, there's really a handful of things that I don't think have been as prevalent or more important ever than they are now in going through this situation with COVID. One of which, quite frankly, is directly related to, and the others, quite frankly, are um, ancillary, I would say. So there's kind of three things that I'm thinking about right now, and I can expand on all of these, and I'm sure we will. One is just the overall future planning of the business, the strategic plan, if you will, and everything that goes into that. The other one is very tactical, dealing with uh, dealing with the Paycheck Protection Program loans, and how do we get forgiveness for those, and how do we deal with that with the government continuing to change the rules on it as well, some to our benefit, some making it a little bit harder, and then dealing with how are we going to pay for things, um, particularly in an environment like now. It's never become more challenging for businesses to get funding um, in this type of an environment because there are a lot of questions out there.
So true. I think those are all three really, really good things to talk about. Let's kind of like get right into it. We'll start with first off with like strategic management in terms of strategic positioning, especially. I mean, a lot of the things
Right.
that I personally kind of buy into is the whole digitalization slash virtual technology, if you will. I know even for like the processing world, that's been a big component. How can a small business strategically position themselves financially to succeed in an economy like this that is continuously changing? And like you said, with
Right.
COVID and all the PPP stuff changing, what are some tidbits or ideas that you might have with what you've seen in the industry?
One of the things that small businesses tend to do, and this is not a criticism at all, but small businesses tend to be started by people who have a drive, have a passion for that particular business or for selling that particular product, whatever it is. And that's why they got into business. That makes absolute perfect sense. So what they do a lot of times is say, well, we can certainly sell, 1,000 widgets next month and 2,000 the following month and all that. And that's fantastic. That's fine. The question is, how is that going to affect you financially to get there? Because at some point in time, if you've studied basic economics, you know that you get to a certain point where you've tapped out capacity and now you've got to add on capacity. So that capacity may be just another salesperson. It may be, if you're a producer, more production capacity. It may be something else. But as you work through those types of things, and it's not just capacity that affects it, but that's an example. As you work through thinking through that, you start to have questions around, all right, what's the financial impact of that? And
Hmm.
so many small businesses, quite frankly, don't plan for the growth from a financial standpoint. They plan for it from a sales standpoint. They plan for it from a this is our overall goal standpoint, but they don't necessarily plan for it in terms of this is what I'm trying to accomplish as an organization, and here's what I need financially to get there. And one of the things that we talk about with clients all the time is putting the numbers down on paper. And to the point that you made before with technology being what it is right now, it's never been easier for small businesses to do that. Not only do you have the tools that we've always used, such as the back of a napkin and a notebook, um, but you've got Excel and you can do some pretty fancy things with Excel. We've also got uh, web-based tools or cloud-based tools where you can also utilize those to help do some of your forecasting, to help come up with some of the assumptions that you need to make, as well as consolidate those numbers down. So you've never had more opportunity as a small business to tap into some of the tools and technology that large businesses have used for years, some more effective than others, obviously. Um, because as we've talked about before, even large businesses make mistakes and end up filing chapters that we don't want to ever talk about, but it's the reality of it. So that's one of the main things I would say from the strategic planning. And if you're sitting in a spot where, the way your business is structured, where you've got the bookkeeper that keeps a bunch of that stuff together, and you are the executive or the leader or the founder of that business, the owner of that business, you want to have somebody that's got a little bit of a higher financial acumen. And by higher, I just mean, higher than the average person walking on the street, to help walk you through that. And if you've got them on team, if you've got somebody on staff, if it's you, fantastic. You're ahead of the game as compared to a lot of other businesses.
And it's just, I think having that framework in place is huge. You get the
Yeah.
metrics, you get the plan,
Yep.
you get something that you can follow. Otherwise, it's a little bit shooting in the dark. And even if you get it lucky, you get it right, it's going to be tough to recreate or duplicate, so to speak.
Yep. No, that's absolutely right. I mean, the even with larger organizations sometimes, and there are many large organizations that have run on Excel. um, the the number of times they're recreating the wheel every year is amazing, and sometimes that's valid because you've got a different set of assumptions, you've got a different set of things that you're dealing with that year. But by that same token, you don't really want to be in that type of a spot.
It's not sustainable. You have to
It's
be able
yeah,
to sustain success. You got to
yeah,
sustain it, continue pushing it forward, and recreate it. And so that kind
yep,
of leads us into number two: recreating success, getting PPP right. Let me quick go to my notes here because I want to type up like a little bit of an example here.
yep.
If you have a small business here, we'll use HVAC as an example.
Hmm.
If you've got 3, 4 trucks, maybe a dozen employees or so, what would be something that you would suggest doing or looking into to make sure you could fully reap the benefits of the PPP fully in entirety?
One of the things that I would do is I would look at how we've spent money over the time that we've gotten the PPP loan and evaluated very critically how our payroll has been affected by the pandemic. Look at how it's affected our shop costs or our building cost, and evaluate where exactly have our costs gone up or gone down. And the reason that I would do that evaluation is that when they originally passed the PPP loan as part of the CARES Act in March, you had an 8-week window. Well, then they updated things over the summer and gave you a 24-week window or until the end of the year, whichever comes first. The point being, what I want to do is I want to make sure that I maximize the amount of my PPP loan that I apply against payroll costs versus any of the other costs that they can allow me to use them for. I can use them against rent, certainly. I can use them against utilities. I can use them against mortgage interest if I'm buying or owning my property as opposed to renting. I can do all of those things, but I want to maximize my payroll spend for a couple of different reasons. One, it is called the payroll protection loan or program for a reason. And the focus is on keeping people in jobs. So as a result, the forgiveness criteria places a high emphasis on keeping people in those jobs and you spending that money on your headcount. So I would evaluate where we've spent the money over the time, because I may right now, if I can prove that I've spent that money the way that it was intended and over those first 8-week period, because I didn't have a reduction in headcount, and then I may go ahead and turn in my paperwork right now. I have some colleagues that would say, absolutely do that. I have others that say, oh, no, wait until the end. You've got to make a decision on what's best for your company and what you're comfortable with. But that's the first thing I would look at, is what kind of a look at those costs to evaluate what time frame I want to use. And
Hmm.
then if I want to expand it out to the 24-week period, I don't know about anybody else, but if I based that application upon 2.5 months worth of payroll, which was the criteria for applying, and now I've got to spread that out over 24 weeks, i.e., almost 6 months, I ought to be able to cover that cost. So there are some good reasons to do it sooner, some good reasons to push it out, but that's what I would do to start off that process. The other thing that I would do, because I may as well address this, there is talk of Congress maybe changing the rules yet again, because we really needed another rule change, he says sarcastically, um, on the PPP loans, because they're thinking about automatically forgiving the loans at a certain level, at a certain dollar amount. Anything below that may be automatically forgiven. Obviously, the proof will be in the pudding. They've got to pass it. It's got to get signed. All of those types of things. I'm advising people not to count on that. But even if they do pass it, at some point in time, you're subject for review. You're subject for audit. And if that's the case, then you're going to have the documentation to back it up. So as you're putting together your evaluation of costs and
Hmm.
adding all of that stuff up, I'd pull together the packet that I would turn in for forgiveness and have it ready, um, either to turn into the bank for them to evaluate whenever I apply for forgiveness, or have it ready if I ever get pulled for audit or review on the program, if they do a blanket forgiveness on loans below a certain level.
That's hugely applicable and super helpful information in and of itself. I've got one more question for you on the PPP stuff. You
Yep.
talked a little bit about tracking it and looking at, where payroll was going, all that stuff. In your experience, is that something kind of like looking at an income statement where anyone can do it pretty easily, or is that significantly more complex where you're really going to want a guiding expert helping you through that?
You know, it's a great question, because there's a couple of different forms out there that the SBA has published. And if you're the type of organization that can fill out the EZ form, you may still want to get help, but there's a reason it's called EZ. And that's because it's a lot simpler to fill out that form and to follow that criteria. If you don't qualify for the EZ form, yeah, I would say absolutely, under those circumstances, get help. Um, the thought process that you have to go through as it pertains to this, particularly if you've got a seasonal business, or particularly if you had a lot of headcount changes
Hmm.
over the course of this pandemic, then you're not probably going to qualify to file the EZ form. And the calculations that they have asked to look at safe harbor provisions, to look at the look back period, to have the comparable period against the covered period that you're dealing with, and these are all terms that they utilize in the program. Yeah, you're going to want some help to go through that, because it can be extremely confusing. And particularly if you don't utilize an outside payroll service that they've already prepared a bunch of the reports for you, it can be extremely hard.
It's definitely one of those things you don't really want to botch as a business owner. It's
Yeah.
kind of one of those things, once it gets messed up, you can fix it, but you've lost time, and you've also lost a financial commitment now because you got to pay
Yep.
someone to get it fixed up. An ounce of prevention
Yep.
is worth a pound of cure.
Absolutely. Absolutely.
So then you also mentioned a third point, funding. Talk to me a little bit about that, please, especially from the accounting financial planning side.
So So many businesses, when they start, how do we fund the business? When you look at how small businesses start and what their common funding avenues are, their savings of the owner, their credit cards, and their loans from family and friends. That's how we often start businesses.
Hmm.
It's one of the great things about the United States. It's one of the great things about the system is that anybody can really start a business. And if you've got the expertise, if you've got the desire, if you've got the wherewithal, you can do that. But what most of us don't have right up front is the funding and the capital in order to do it.
Very
And
true.
especially over the past 10 to 15 years after the financial crisis in the late 2000s, we had the Dodd-Frank Act come out, and you look at the requirements that banks have, even small banks that survived it. You've got criteria that you have to meet in order for them to give you a loan. And it makes it very hard to tap into a traditional funding source like a banking organization. So now you're going back and saying, well, do I have more savings I want to put into this? Do I have more friends and family that I can tap into? Do I want to fund this by credit card? And that's where frankly, it's forced a lot of businesses that maybe because of the amount of time that they've existed, they don't have high credit because just it being a function of timing. Maybe the COVID crisis has caused your business to really take a hit, and that's affected your credit from a business standpoint. You start looking at needing to look at other areas on how in the heck can I get funding? And frankly, for businesses specifically, it's created, it's not created a niche, but it's forced businesses like you and me out there to start to consider how can I fund my business? How can I survive this? How
Hmm.
can I stay afloat? And as opposed to dealing with the traditional requirements of a banking institution that you may or may not qualify for, you may have to look at organizations out there that are alternative funding organizations. And some of those really are quote unquote alternative funding. Some of them, quite frankly, are not so much funding organizations, but organizations that buy your receivables. You've already sold the product or you've got a contract coming up and you need to get through 2 months until you collect on that money. Well, you may be able to sell that contract to somebody else, get the money that you need in order to execute it on upfront, knowing that that payment is coming later. And those are things that small businesses have to think about and have to consider in an environment like this, where not only is your business taking a hit, your credit's taking a hit, and banking institutions may be a little more hesitant.
So then when you're talking alternative financing, we're not talking lending. We're talking buying an asset, so to speak.
Yeah, yeah, we
Okay.
really are.
So when you're in that discussion, then would something like that technically impact your credit or not?
Well, one of the things that a lot of those organizations will do is they want to think about how uh, how you're going to be able to pay this back, obviously. And anytime that you're able to have loans out there or have uh, have financed your business and you continue to stay and you can continue to make payments, you're going to improve your credit. One of the worst things you can do from a personal standpoint, from a business standpoint, is to get behind on any of your obligations. Because when you start making payments late, those are the types of things that start to affect your credit. So having that cash in hand when you have factored your receivables or something like that is absolutely critical in order to keep your credit rating up as a business and as an individual.
I got you. Okay, I see how that works. So you'd have a financing company come in and they would buy your contract that you've performed the work on but haven't yet collected. You'd pay off the bills that you have outstanding. You would get the injection of cash from the finance company, but then the finance company would get the full collection on the contract.
Right. That's exactly right. That's exactly right. And you have the benefit of being able to stay solvent over that period of time. Your business is still a going concern. and you have the ability to keep up on all of your obligations. So you can pay your employees, you
Hmm.
can pay any loans that you have outstanding, and keep up on those things. Because really, when you start to get behind on those payments, boy, that just absolutely critically affects your credit.
And that's where you start getting into that business spiral, so to speak. And
Yes,
once you get into it, that sucker's hard to stop. It's hard to keep the bad momentum from building.
it really is. It really is. I mean, anything you can do to keep your ratings up is absolutely important. Um, and that's true from a personal standpoint. It's true from a professional standpoint. It's a lot easier to get a loan with with an 800 credit rating than it is a 500 credit rating.
Too true. Too true. Roy,
So
thank you so much for joining us and for sharing those industry insights, your thoughts, your tidbits. They're always much appreciated. We can literally talk for hours on this, but I want to be respectful of your time. But seriously, thank you so much for carving time out of your day.
I appreciate it tremendously, John. Thank you for taking out. And thank you for asking. So I look forward to the next time we get to shoot the breeze.
Absolutely, definitely. Y'all, thank you so much for watching in as well. Please remember to like our Facebook page. Drop a comment on the feed too. Maybe give us a little insight as to what you're seeing or how this might positively impact you as well. Thank you all so much for listening. Stay safe, stay blessed, and remember, we're bullish on the American dream and we're bullish on your future.